So, all right. All right. So you're welcome back to my YouTube channel once more, where we'll be looking at the market. So these are weekly look at for the market, for what the market is going to do. So first of all, I want to say thank you, a big thank you for your comments, your likes, your subscription, and also your contribution. So a lot of persons reached out to me and they were like, let me do some tweaking and some changes to how I do my videos. All right. So going forward, we'll be adding these changes that have been talked about. We'll be adding them into our videos. All right. But then before we go into the analysis proper, thank you very much for your subscription, your likes. I really appreciate it for your encouragement. Thank you guys. All right, so you know how we do it. So this week we're going to look at the dollar. We know we've been looking at the dollar ever since. But then we keep looking at the dollar and then see how we can maximize the information that the dollar is going to give to us. Okay. So let's just dive down and look at what the dollar is doing. Okay. All right. Okay, so we've been doing this for a very long time now. So for some time now, not really long though. So, we did our markups and we see how the market has been reacting to our markups. And then remember last week when we were saying, okay, since this market has exceeded this level, it means that the market will obviously go back to the upside before dropping down. Okay. So now let me take this off and start it afresh. All right. Just bear with me because I'm a little bit under the weather. All right. Okay. So let's do this. This is the daily time frame. We can start from the weekly. This is the weekly time frame. We can even go far back the monthly. Let's see what the market is saying from the monthly. So from the monthly time frame, we already see that we are in an uptrend, and this is our range. This is our range to the upside. Okay. So all of this is more like the market is in a corrective phase. All right. So we have a corrective phase, then push back to the upside. But then this can only happen when we start seeing moves coming from the weekly time frame to see how the market is reacting. Okay. Okay, so this is actually the what? Weekly time frame that is looking super bullish. In the weekly time frame, let's see what's happening. So the weekly time frame, this impulse that we're looking at here is somewhat trending environment. Okay. So you can see that we have this last push to the upside. I keep doing it this way. Then we had a break of structure. Then we have this swing. Okay. All right. We had this swing and we had a correction, another one. Then we had another swing. All right. So now the market has exceeded this level. So we have a new swing level. We have this level, a new swing. So if we align what is happening to the monthly, we can see very well that we are in a new environment that is trying to encourage us to go to the upside. All right. So this looks more like an impulse, correction, then another impulse. All right. All right. But then let's see. Let's work with this weekly range and see where we can get to. Because we are not position traders. I'm not a position trader, rather I'm a swing trader, not a position trader. So, but then I will look at what the market will do for the daily and the H4 time frame. Okay, let's go. From the daily, let's see what's the market saying. Okay, so remember all of these is just one move going to the what weekly time frame. So this is just the weekly time frame move. And this is what we are working with. Okay, but from the weekly time frame move, you can see that the market has created up and down. So we had this downtrend going from this level down to this level. Then we now had a swing that broke the structure, right? We had a swing that broke the structure. Then we had the correction, then we now have the inverse. So the daily structure that we're working with is actually here. We have our swing from this level, all right, to this level. So that's our swing. That's the last impulsive move to the upside. All right. Okay, so if we have this, now price has exceeded that level. So if price has exceeded this level, obviously, it then means that the market is actually in a downtrend right now. So price has exceeded this level. So we can now say we have this a normal high and a normal low, not a swing one. This is a normal high, but now has created what? A swing low that is lower than this very guy. So with that being said, it then means that we are in a new structure. We are in this structure right now. So we are no longer in this structure, but in this structure. So that was why the last time when I said if price exceeds this level, we will get a push back to the upside, and we will not see a push back to the downside. So right now we've gotten the push back to the upside. All right. So impulse. All right. So this is what we're working with now. Impulse. All right. So that's what we're working with right now. Okay. Impulse. Then all we want to see is for price to keep coming to the downside. All right. So with this being said, it means that the dollar is going to be weak. So we need to look for a way to maximize this information that we have. So the dollar will be, the US dollar is what? Weak. So we now need to look for ways to maximize this information. Okay, so if the dollar is going to go to the downside, we now need to look for ways to maximize what this information. All right, but let's look at what the H4 time frame is saying and which is the last. So we can know how to maximize our moves. Okay, all right. So you can see all of this move is just one move from the daily time frame. So right now, let's see if we're going to have a counter trend line break. All right. We have a counter trend line break. And we're going to short this market all the way to the downside. All right. Now, if we don't have this counter trend line break, it means we will obviously be having a deep correction to the what? Downside. If we don't have this break, it means that the market will obviously bounce off this level and give us a deep what? Correction. But if we have this break, it means that the market is going to go further to the downside. All right. It means that the market will go further to the downside. So we just have break retest and go back to the downside. Okay, but overall, we are seeing that the US dollar is going to be weak. So let's look at it with other currencies. You can look at it with the Euro USD, the Euro USD. All right, fine. So you guys remember what happened here the last time that we did our analysis and we were waiting for the market to drop. And it obviously did what? Dropped to the downside. All right, you can see this was our analysis, and I can actually break this analysis down if you want me to. I can do that over and over again. All right, so let me just erase everything, and I can do that over and over again and again and again. Okay. All right, so I start from the monthly. Okay, so from the monthly time frame, you see very well that the US dollar has a positive correlation with the Euro USD. So we are in this range. We are obviously in what? In this range. Okay, it's very visible. We are obviously in that range. You're obviously in this range, and this range also. So obviously within this range. Okay. So we might equally see this market keep going to the what? Downside, because this is more like the impulse, and this is what's more like a correction. Then we have another impulse going to the downside. Okay. But then let's look at what the weekly is saying. All right, so the weekly time frame. In the weekly time frame, you can see we have this, we have this. All right, so structure broken by this guy. We had another move. So structure has been broken by this guy. So we now have this guy. So we now have our range that we're working with. So it means that we might obviously have just this impulse push to the upside and we keep pushing to the downside. All right. But then let's look at what the daily is saying. Okay, so the daily is saying that we are still what? Bullish. Right? Because this was the last push to the upside. So the last push to the upside. All right. Then we now had this move. Then we now had this move. And now structurally broken this move. We now have a new range. Where is our range? We have this and we have this. That's our new range. So obviously we can see that this is more like an impulse. All of this is a correction, and you can see impulses going to the upside. All right. But then let's see how the market is going to react to this. So if I want to, we actually in this throughout till Monday. On Monday, we got out of this trade here to wait for what the market will do for the week. So we might obviously be seeing pushes back to the upside since we are now in a bullish environment. Okay, I can do this, a bullish environment. This is a bullish environment. So impulse correction, and we have another impulse going to the upside. All right. So looking at the markets, we need to try as much as we can to understand how each of these currencies they correlate with each other and to maximize that information that we are pulling out. So you don't necessarily need to just keep buying or keep selling if you don't really understand the structure and how the market goes. It's more like when you want to get to the last floor of a building There are some structures that are in place for you to go through to actually make your movement easy for you. All right. So the market is actually built that way. It's built with structure technically. So when you look at the market, you can technically understand that, okay, since this is the structure of the market, if this happens, this happens, this happens, this is what the market is going to do. All right. So we just need to understand what the market is doing and how the structures interconnect, so we can know how to correlate these structures to each of these currency pairs and know how we're going to maximize the information that we are gathering. Okay. So for me, I'm seeing that the US dollar, we would be going to the upside for the US dollar. So for this week, remember last week, we kept on selling, we sold all the way, then we closed on Monday. We closed on Monday. Yeah. Then we kept on selling all the way. So now we want to see the market reverse back to the upside, since we are in a corrective environment right now. So we want to see another move going back to the upside. All right. So this is how we basically look at the market every single week. Every single week. This is basically how we look at the market every single week. So I can say Euro USD, a buy. Then let's look at GBP USD. Let's look at GBP USD. Okay, so GBP USD, remember we talked about it reversing from this level, and it just did. Last week, it just did reverse from that particular level without being told. All right. So immediately the market got to that level, it started dropping back to the downside. So you can see it dropped, went up back, and dropped again. All right. So understanding the market is vital and it's very, very important, because if you don't understand the market will just do its thing and you will be out of it. Okay. So right now, I want to see this market push back to the upside. All right. I want to see this market push back to the upside. Yeah, I want to see this market push back to the upside. So if that happens, we just need to wait for price to exceed this last swing high. Then if we have this, we will have back down, then pushes, keep going back to the upside. All right. So that is our analysis for the week. And you can learn a lot from the way I do my markups. You can learn a whole lot from it. All right. So you can learn a whole lot from it. So it's not something that is difficult. It's just for you to understand the structure of the market. So we're just waiting for this to happen, and we keep going back to the downside. Okay. So one sweet thing about structure is that for you to get past a ceiling, you need support. By support, I mean you need to put down something to give you the support not to fall, because first of all, we have gravitational law. All right. And what gravitational law does is that if you go up without a support, you're going to fall down and you might even die or seriously wounded whatsoever. Okay. So for a ceiling to be broken, what happens is that you need a support to maximize your energy to get that ceiling broken. All right. So that is what the market does. The market creates each of these support to make sure that they break structure and keep going in their way. So all we need to do is that We don't need to enter the market when the market is trying to break structure. We need to enter the market when the market has already broken the structure. All right. So that's why waiting is the major thing that we do in the forex market. If you can't wait, then you can't trade the forex market. All right. You need to wait for the price to come to you before you do that. More like if you want to stock up in your house, you need to wait up, first of all, for you to have the money to stock up, and two, for you to, let's say you're out of stock in the house. You don't stock up when you have a lot. You stock up when you don't have a lot in the house. All right. So that's basically how it works. Not because you have money, you just want to go to the market and just buy things. You buy things because you need them. You buy things because you want them. All right. So assume you don't really want anything and you have the money. You won't buy anything. Okay. So that's how the market works. So you don't get into the market when the market has not broken structure. You get into the market when the market has broken structure and you know it's what direction. So thank you very much, guys. And I really appreciate. Sorry for my voice. I'm really under the weather, but I'll be fine. So all I need you to do is just for you to subscribe to my YouTube channel, like and comment. So if you have any contribution, you can just share with me because I have a whole lot that will be bringing to this community as time goes on. All right. So thank you and enjoy your week. All right. Thank you and enjoy your week.